Hi everyone, my name is Nick from Bluehive and I'm joined here with Jonathan Gan, our director. Jonathan, thanks for joining.
Thanks, Nick.
Now this video is specifically for first home buyers who are brand new to looking for their first property. Okay, so we wanted to put out some content just to get you started, and I'll start off by asking, John, how long have you been helping first home buyers buy their first home?
Well, it's a 25-year journey so far. I've been broking for that period of time, and I've seen generational change from people buying their first home to now their kids buying their first home. So it's been a journey. I remember when I bought my first home, I was 24 years old, and it was a daunting experience, thinking, wow, I mean, how can I afford this? At the time, I was engaged. We bought it and we moved into it when we got married a year later. And it was like a big decision at the time. But, you look back and you go, what a great decision it was. So I guess it's always a daunting experience for someone to buy their first home. It's a big financial commitment. But I think it's going to happen one day, sooner or later, whether you're buying it in your 20s or you're in your 30s. At some point, you'll be on that journey of buying your first home.
Excellent. So with someone with 25 years of experience of helping, I think we've come to the right place to get some good information. So let's start with that. So picture the viewers are coming to us and it's their first chat. They don't know where to start. Probably one of the most common questions we get is around, how much of a deposit do I need, or how much savings do I need? So can you start off with, there's a common misconception that people may need a 20% deposit to get into the market. Is that true?
Well, there isn't. At the moment, there's some good government assistance, some schemes available for first home buyers to have a minimum 5% deposit. So generally speaking, from a lender's perspective, if you borrow more than 80% of the value of a property, the lender will insure that loan and pass the premium of that insurance to the borrower, and that's called lender's mortgage insurance. So the borrower pays for it, but the bank's insured their own loan for anything that's above 80% of the security value. So if you're borrowing 95%, banks will go, I need this insured. So the government's turned around and said, we will guarantee that. We will guarantee that loan. So you don't have to get insurance, and therefore you don't have to pass that cost onto the borrower. And also, if you borrow more than 80% with most banks, they charge you a higher interest rate because of the risk. Well, in this case, there are a number of lenders that have signed up under the government scheme that will give you a very, very competitive interest rate, and so you're not penalised.
So it's not all lenders that are involved in the family home guarantee?
No, not all lenders, but there's some very good lenders on the panel, and so there's some choices there.
Okay, and so what are some of the other costs that a first home buyer should have in the back of their mind?
Well, there's obviously stamp duty is a big question that people go, oh, it's so expensive to buy because I've got to pay stamp duty. Again, first home buyers don't have to pay stamp duty up to, if they buy a property, up to $600,000, and that goes all the way up to $750,000. So it's a sliding scale. If you buy a property at $751,000, you'll pay full stamp duty, or even $750,000. But if you buy it for $700,000, there is a sliding pro rata calculation of that stamp duty. So government's trying to support, it's a federal government scheme to help first home buyers. But that's separate, a government incentive or assistance, from the Housing Australia guarantee, where you can put 5% deposit in.
And that sliding scale from 600 to 750, that's in Victoria. Is there different limits for different states?
Yes, there is. Yes. Sorry, that was specifically for Victoria. But depending which state you are, there are different concessions.
And can a first home buyer apply for both of those schemes? So they get the stamp duty concession as well as the 5% deposit?
That's correct. Yes, you can qualify for both.
Okay. And so let's say someone comes to you. What are some of the first things that you would be talking about to a first home buyer?
Most inquiries that come through are, am I in a position to buy my first home? So it's really giving the education to that inquiry as to what is their position. If they are ready now, what's the next steps to put in place so that you have the confidence to go and start looking at properties and potentially making an offer. To, well, you might not be quite ready now, but here is the steps or what you should be looking at to put in place so that you can get to the point of being ready to buy your first home.
Okay, excellent. So from our perspective as brokers, when we have a chat with someone, we'll understand their income, any of the debts, and we'll be able to understand, what that borrowing capacity might be. And is the borrowing capacity a fixed amount, or does it depend on lender to lender?
Well, it is. Every lender has their own assessment. The market's very competitive. Lenders generally are around the same mark. There can be a little bit of variance here and there, but that's our job as brokers, to really match the lender with the applicant's position, to meet their requirements and objectives, and to ensure we are finding the best loan for their requirements. And so that's why you come to someone like us as a broker to really do all that research to find the best lender for you. But there can be variations between lenders, and it's for us to find that best match and to educate the client.
And so what are some of the things that the lenders are looking for when they're assessing someone's borrowing capacity?
Well, they look at they look at your credit. They look at what debts you have. They look at your employment. Are you on probation? Have you just started a job? Have you just moved from one job to another? If you're a 22-year-old, probably don't have much of a credit history versus a 27 or 8-year-old that's probably had a credit card or had a car loan. So they look at all your history, your conduct, your credit score, and really that's something that we investigate very early on. When an applicant makes an inquiry, we run a credit check.
And just for the people listening, is there any pitfalls that you would love to share with everyone that's in this position now, things that can really hurt their credit file early on?
You've got to be very careful of payday lending. That's something that a lot of banks do not like. So if you're thinking about a payday lend, think twice. Maybe talk to someone who can, like us, that can educate you around other options. Question of whether you should buy a car now and have that debt which could affect your servicing versus maybe holding off and buying the house first. Making sure you don't have crazy credit card limits, because credit cards do affect your borrowing capacity. The banks generally take 3.8% of your credit card limit, and that becomes a monthly commitment in your servicing. So that can also have an impact.
So even if someone's got a $15,000 limit on their credit card, but they only have a $500 balance, are you saying that lenders are going to base it on the $15,000 limit, not what's actually owed? Because
tomorrow you could go out and buy something on that credit card and expose yourself to the full limit. So yes, it's always on the limit.
And if that is the situation, are people able to reduce their limit right before applying for a loan? Is that something they can do?
Yeah, you can. You can simply, a lot of them actually allow you to change the limit online, on your online banking. Or it could be a quick call to the bank and say, can you please reduce my limit? But of course, you'd do that once you've had the broker do a full assessment of your position. And you'd only need to do that if it needed to be done to help you get the loan across the line.
Okay. So we've talked a little bit about the family home guarantee, where you only require a 5% deposit. Now, just to be clear, these are for properties that people are moving into, is that right? So as their own
first home buyers.
Yep.
It's not for investors.
Okay. Are there any other schemes available that may come into play for first home buyers?
So there are limitations around the maximum value that the first home buyer guarantee scheme allows you to purchase a property at. So, for example, currently in Victoria, the limit Metro Melbourne is 900,000. In Sydney, it's I think 1.5 million. So, if you were, for example, in Melbourne looking to buy your first home and it was above 900,000, you would qualify for that scheme. So you couldn't have a 5% deposit and get away with not paying the lender's mortgage insurance. However, there are family pledges or what's called security guarantees where maybe a parent could assist using a limited security guarantee of their property to help their children to buy a property where they're borrowing 80% of the securitized value that you're offering the bank. So an example would be, let's say you wanted to buy $1 million property and you're above the 900,000 limit under the first home buyer guarantee scheme. If your parents assisted you with some of their security, it's a limited guarantee security of their home, you could borrow maybe 950,000, so 95%. You put your 5% in. Look, you could even borrow 100%. There's lenders that will lend you 100%, so you don't put any money in as far as buying a house for $1 million and borrowing $1 million. You still need to cover the stamp duty, but the banks still securitize at 80% because they've taken the additional security from the parent's property.
Okay, so in that example, if a property is worth $1 million, normally someone would need to put in a 20% deposit because it's over the threshold, which would be 200,000.
Correct.
You're saying that they can use a portion of potentially their parents' property. So who is responsible then for the debt in that situation?
The borrower. The family guarantee does not implicate the parents on the loan. They simply provide security guarantee to their children or child, and the applicant is the one that's responsible for the debt.
Okay, so for potentially a single or couples that are on a solid income, they may not need to have substantial amount of savings, but they could still, as long as they can show that they can repay that loan, they could still potentially borrow that amount.
Correct. Yeah, so that's a servicing question. Again, this is a solution outside of the first home buyer guarantee schemes that the government's currently offering to assist first home buyers.
Okay, so we've covered the grants that are available, what savings may or may not be required. What are some of the other common questions that you get from first home buyers when they first come to you?
A lot of them ask the question, how long do I have to live in this property? Well, you've got to meet the criteria. So ideally, it's your 12 months. I know with the first home buyer guarantee, they need you to be in that property for 12 months before you could potentially look at moving out and renting it. First home buyers, you've got to be at least 6 months out of that 12 months if you're qualifying for the zero stamp duty or the reduced stamp duty. So there are some limitations around how quickly you could potentially move out and turn that into an investment property.
Mm-hmm. So what would your advice be to first home buyers who want to take the next step? Who should they speak to, in what order, and what questions should they have ready?
Well, certainly, if you can find out whether you would qualify for a loan, that's probably the first step. So speak to a broker. Give them the information so that they can complete a preliminary credit assessment of your position. That will very quickly tell you if you're ready or have some level of success to get a loan, or if you need to put some plans in place so that you know when you could be ready to do that. But that's the first point. Talk to your broker and get the green light. From there, you'd be talking to obviously doing your homework on where you want to be living, and then the next step from there is to know that you can go and negotiate and make an offer on a property.
And when people are at that stage, so let's say they've gone to a broker, they've been assessed, and they may even have a pre-approval at this point. So when they go to actually start looking at properties or speaking to agents or potentially putting in offers, what are some things that they should be thinking about or should be aware of?
I would say that it's always recommended that if you're keen to buy a property, that you do get an inspection done on that property. We've had examples recently, Nick, where one of your clients made an offer and did put down a clause subject to building inspection and came back with a structural issue with the property. So I do recommend, if you're making an offer on a property, to at least ensure that you've got a building subject to building inspection and pest inspection.
Okay, excellent. That's really good advice. And in order for someone to look over the contract, is that when you'd bring in a conveyancer or a solicitor, or what's the difference between those two?
I think if you're going to sign a contract, it's a legal binding contract, you should always get professional advice. And so before you sign a contract, and if you are ready to make an offer on a property, you should have a copy of that contract. You should pass it to your conveyancer or solicitor to peruse, and they will come back to you and highlight any issues or things that you should be aware of in that contract. And again, that contract should be provided to your broker, who would also look at it from a lending lens to make sure that there was nothing in there that would be an issue for a bank.
So that brings up a good point. So even if someone does have a pre-approval, would you still recommend that they have a clause that allows the broker time to get a valuation on the property and make sure the numbers stack up?
Yeah, so it's difficult to put subject to finance in a lot of contracts. There's a lot, it's a competitive market. Vendors want to know that they've got a buyer that's unconditional. So that's why in Victoria particularly, and also in New South Wales, auctions are the way everyone goes. So you've got to do a lot of your homework before. You could always get a building inspection before the auction. You have your contract reviewed prior to auction, and you need a good broker to basically give you the green light, because part of that will be once the building inspection comes back, we know we've sort of covered off on structural issues. We would certainly review the property itself. A good broker would review that property and make sure there was nothing about it that would be a concern to a bank. And I think once the broker's given you the green light, you should feel comfortable that that loan will get secured for you.
Oh, amazing. And I think in terms of the context of where our viewers might be, if this is your first introduction into looking for a first home, we might do a separate video around tips around negotiating at auction or speaking with agents. But for now, is there anything else that you would want to be clear with a first home buyer in this early stage as they're looking to understand what they can borrow and what sort of deposit they might need to contribute? What are other key factors that they should know about?
I think we've covered pretty much everything that a buyer, if you're serious about buying, you go and talk to a broker. Get that assessment, get that preliminary credit assessment done. Then you know that you're going to get supported by a bank to purchase. You'll know what your capacity is, your limit, what you can afford to buy. Then the next strategy is going to be, can you get some advice around how you can buy that property well? It's difficult when it's a competitive market because you're competing against a lot of other buyers, but maybe a conversation could be with a potential buyer advocate for you.
All right, awesome. Well, I hope that's been really helpful. This was, as I said, just an introduction for first home buyers to understand what questions they should be thinking about and who they should speak to in which order. So if you'd like to reach out to Bluehive, how should they do that, John?
Well, they can simply go to our website, bluehive.com.au. We've got 6 brokers. We're all there for you to reach out to, or you can do an online inquiry and it will come through and we'll allocate it and we'll get back to you within a very quick time.
All right, amazing. Well, we look forward to hearing from you. If you've got any questions, we'll be speaking soon. Thanks very much.
Thank you, Nick.
Thanks, John.